Ever feel like you're just drowning in information? Articles, reports, endless feeds, you're trying to keep up. But honestly, the sheer amount, it can be totally overwhelming.
Yeah.
Sometimes you just wish someone would cut through all that noise and just give you the important stuff.
Right. Yeah, go.
Well, that's pretty much why you're here with us for this deep dive.
Exactly. And today we're going to do just that. We're going to cut through the noise on a topic that's, it's becoming absolutely crucial for businesses, for investors. It's called sustainability assurance. And we're specifically diving into a major new proposed standard, ISSA 5000 ED.
Okay, sustainability assurance, ISSA 5000. Why now? I mean, why is this suddenly such a hot topic? It really does feel like it popped up almost overnight.
Yeah, it does feel that way sometimes. It's really a convergence of some pretty powerful forces. On one hand, you've got this huge rising demand from institutional investors, from shareholders. They're not just looking at the bottom line anymore, They genuinely want to evaluate a company's environmental impact, its social impact. They really want to know if a company is actually sustainable, not just sort of paying lip service to it.
Right, so it really comes down to trust. And companies themselves must be feeling that pressure too.
Oh, absolutely. Companies are definitely seeing a competitive advantage now. They're quite eager to publish their, green credentials, maybe as key performance indicators. It helps attract those investors and socially conscious consumers too. But look, it's not just voluntary stuff anymore. There's a really significant regulatory push happening.
Okay,
Well, take the European Union, for instance. Their Corporate Sustainability Reporting Directive, the CSRD, that's going to require many organizations, quite soon actually, to not only report very detailed sustainability info, but also to get an independent assurance opinion on it. So this isn't just a nice to have, it's becoming a legal requirement in many places.
Wow, okay. So you've got investor demand, companies wanting to prove themselves, and governments mandating it. That sounds like, a massive new opportunity for the firms that provide assurance, right? The accountants, the auditors. But I can already sense there are going to be some serious challenges baked into this, especially maybe around the ethics of it all.
You've hit the nail on the head. That's exactly what our deep dive is about today. We want to unpack this new standard, ISSA 5000 ED, understand its core principles, how it's supposed to work in practice, and crucially, tackle those inherent risks and the ethical considerations involved. Our goal really is for you to walk away with a concise but still thorough understanding of this rapidly evolving landscape, help you make sense of it.
Perfect. Let's jump right in then. When we talk about sustainability in this context for ISSA 5000, what are we actually talking about? Because it sounds like it's much broader than just being green.
That's a great place to start. Yeah, ISSA 5000 ED defines sustainability matters very, very broadly. It covers environmental, sure, but also social, economic, and even cultural matters. And here's a really key part. It includes both the impacts of an entity's activities on the environment, society, et cetera, and the impacts on the entity itself.
Right. So it's like a two-way street of impact, not just what the company does to the world, but also how sustainability issues like climate change might impact the company. Can you give some concrete examples?
Sure. Think about it this way. It covers everything from climate greenhouse gas emissions, for example, to energy, like the types used, and consumption levels. It includes water use, effluent discharge, how a company impacts biodiversity. Then on the social side, you're looking at labor practices, things like diversity, equal opportunity, training, health and safety. It goes further into human rights, community relations, customer health and safety. And even economically, it can touch on things like tax strategy, anti-corruption efforts, market presence.
That is incredibly comprehensive. Wow. And this information, it isn't just numbers in a spreadsheet, I assume. It probably comes in all sorts of formats.
Exactly right. It can be presented in, narratives, descriptions, tables of figures, performance indicators, even diagrams or detailed graphics. It's definitely a far cry from just looking at a standard balance sheet or income statement.
So, okay, you've got this massive, complex landscape of information, different types, different topics. How do you even begin to bring order and, trust to it all? Is that where this new standard, ISSA 5000 ED, comes in? Like a universal rule book to verify it?
That's precisely the idea. This proposed standard, its formal title is General Requirements for Sustainability Assurance Engagements. It was issued by the IASB, that's the International Auditing and Assurance Standards Board, back in August 2023. And its purpose is exactly that, to be a truly comprehensive standalone standard, one that's suitable for any sustainability assurance engagement, applicable to any sustainability topic, and, this is crucial, capable of working under multiple different reporting frameworks.
Okay, that sounds incredibly flexible. Let's dig into those key principles. First, you mentioned multiple frameworks. What does that actually mean in practice for companies trying to report on this stuff?
It's vital because, well, there isn't just one single rule book for sustainability reporting yet. Organizations might be required to, or maybe choose to, comply with several different sets of guidelines. Historically, we've had frameworks like the Global Reporting Initiative, GRI, or the Task Force on Climate-Related Financial Disclosures, TCFD. More recently, we've got the International Sustainability Standards Board, the ISSB releasing its standards, IFRS S1 and S2. And then, like we mentioned, you've got regional regulations like the EU's European Sustainability Reporting Standards, the ESRS.
Wow, that's quite an alphabet soup of frameworks. So a single company, especially a global one, might be reporting under several of these at the same time. Sounds complicated.
It certainly can be. Yeah, many large organizations operate globally, so they fall under the scope of multiple frameworks. And that's precisely why ISSA 5000 ED's adaptability is so essential. It's designed to be applied whichever framework or maybe combination of frameworks the organization is using. Think of it almost like a universal translator for the assurance part of sustainability reporting.
Okay, that makes sense. Now, the other principle that really jumped out at me from the notes was this idea of the standard being profession agnostic. What on earth does that mean? And why is that potentially such a big deal?
Right. Profession agnostic is a really interesting development. What it means is that ISSA 5000 ED is designed so it can be used by any competent assurance practitioner, not just professional accountants.
Wait, really? So you're saying experts who aren't traditional accountants, maybe, environmental scientists or engineers or social impact specialists,
Yeah.
they could actually use this standard to provide sustainability assurance.
That's exactly the implication. And yeah, it's quite exciting. Experts in specific sustainability matters like environmental science or human rights can potentially use ISSA 5000 ED. It definitely broadens the field, encourages more interdisciplinary teams, which you probably need for this stuff.
So are we seeing a whole new wave of professionals potentially stepping into this assurance space? What does that mean for the traditional auditing firms? Is it a threat or maybe an opportunity to collaborate?
It's likely both, I'd say. An opportunity for collaboration, certainly. But there are two really critical conditions for these non-accountancy professionals to use the standard. First, they absolutely must adhere to relevant ethical requirements similar to those accountants follow. And second, they need to apply a system of quality management that is at least as rigorous as those used by accounting practitioners. So yes, the door is open wider, but the bar for quality, for ethics, for rigor remains very high.
Okay, that provides some important guardrails.
Yeah.
It opens the field but maintains standards. That makes sense. Now, let's shift gears a bit and talk about the mechanics. What are the actual objectives when someone undertakes an assurance engagement using ISSA 5000 ED? What's the end goal?
The primary objectives are fairly straightforward, conceptually at least. First, it's to obtain either reasonable or limited assurance about whether the sustainability information is free from material misstatement. Basically, is it accurate and not misleading in any important way? Second, to express a conclusion based on that assessment in a formal written report. And third, to communicate any other findings or matters as required by the standard itself. And, that difference between reasonable and limited assurance is key. Reasonable is a higher level, requiring much more robust evidence gathering.
Got it. And before they even agree to do the work, what does an assurance practitioner need to check? It sounds like they can't just dive in without some upfront checks.
You're absolutely right. There are crucial preconditions. Before accepting an engagement, the assurance provider needs to be really clear on several things. They have to understand the exact scope of the work, precisely what sustainability information they're being asked to assure, and what the reporting boundaries are. Is it the whole company? Just one division? They also need to check if suitable criteria exist, basically. The rules or standards the company used to prepare the information. Are those criteria objective and understandable? And they need to determine the level of assurance required reasonable or limited. On top of that, quality management is just paramount, both at the firm level and for this specific engagement. The engagement leader, the person in charge, has overall responsibility for quality, competence, ethics, and making sure they have the right people and enough time and resources.
Okay, so once they've accepted the job, the planning phase must be incredibly important given how broad sustainability is. This can't just be a checklist exercise.
No. Definitely not. Planning is absolutely crucial. The assurance practitioners must get a thorough understanding of the organization itself, its operations, and crucially, its processes for identifying what sustainability information gets reported and how it gets reported. That includes understanding the relevant internal controls the company has in place. They'll use risk assessment procedures, just like in a financial audit, including specific considerations around potential fraud. And as I mentioned, for those reasonable assurance engagements, the higher level, there's significantly more detailed work required to really understand and perhaps even test those internal control systems.
This brings up a really interesting point, materiality. That word means something quite specific in financial audits. How does it work here? How do you decide what's important enough to verify when you're talking about, say, biodiversity impact or employee training?
Yeah, materiality is a significant issue, and ISSA 5000 ED acknowledges it's complex. It talks about what you might call a bifurcated or perhaps a dual approach. You're essentially assessing importance from two different perspectives. First, you consider the significance of the sustainability matters impact on the organization. That's often called financial materiality. How does climate risk affect the company's value or operations? But second, you also have to consider the significance of the business activity's impact on the outside world, on the environment, on society. That's often termed impact materiality. This whole concept is sometimes referred to as the organization's double materiality.
Double materiality. Okay. I think I'm getting it. It's recognizing that what happens to the planet or society can impact the company's bottom line, and what the company does impacts the planet and society, and now both perspectives are considered material, potentially.
That's a good way to put it, yes. Now, it's important to note that while the assurance provider needs to understand the organization's process for determining what it considers material, the assurance provider's own materiality considerations for planning and performing the assurance engagement are separate. They make their own judgment based on user needs. And one more thing here. Misstatements aren't just about wrong numbers. They can be quantitative, yes, but they can also be qualitative, like misleading descriptions or omitted context.
That makes a lot of sense. Looking at it from both angles, impact on the company's impact on the world. Okay, so that leads us neatly into what sounds like maybe the biggest practical challenge, actually getting the evidence. It can't be as simple as checking invoices like in a financial audit.
You're absolutely right. Obtaining sufficient, appropriate evidence can be particularly difficult for a lot of sustainability information. It's especially challenging for qualitative disclosures, things like, say, descriptions of a company's commitment to human rights or community engagement. How do you objectively verify that? And it's also tough for forward-looking information, estimates, targets, future plans, climate scenarios.
Yeah, I can see that, trying to audit a projection or a scenario.
Exactly. Because this kind of information can often be based on assumptions, maybe best estimate assumptions, or sometimes even hypothetical situations. There's just inherently more potential for management bias or just significant uncertainty. It's not like verifying a past transaction.
So it requires a ton of professional judgment from the assurance provider, I guess. More art than science sometimes.
It certainly requires significant professional judgment, yes, in evaluating what constitutes good enough evidence in those circumstances. And another layer of complexity, the evidence might not all be internal. You might need evidence from external experts, perhaps a climate scientist, a biodiversity specialist. You might even need information from other parties within the entity's value chain, think suppliers, maybe even customers. All of this really underscores that critical need we mentioned earlier. Ensuring sufficient time and resources are allocated to these engagements, you can't rush this stuff.
Okay, so after all that complex work, finding evidence, dealing with uncertainty, the final step is the report. What's key there? Users need clarity, right?
Absolutely paramount. Users must clearly understand the level of assurance that's being provided. Was it reasonable or limited? The report has to explicitly state that limited assurance procedures are much less extensive than reasonable assurance procedures. And consequently, they result in a substantially lower level of confidence, a lower level of assurance. That distinction is absolutely vital so users can interpret the conclusion correctly and aren't misled about the degree of confidence they can place in the information.
Right. Okay. Now we have to talk about the elephant in the room when it comes to sustainability reporting generally. Greenwashing. It's a huge concern for investors, consumers, everyone really.
hmm Greenwashing is definitely a significant potential problem. And it's basically when an organization makes false or misleading statements about its sustainability performance or information. You can draw a pretty direct parallel, I think, to creative accounting in the financial world, where information is manipulated, maybe legally but misleadingly, for the preparer's benefit, not the user's. And look, in its most severe forms, greenwashing can absolutely be considered fraudulent reporting. Regulators are increasingly focused on this.
That's a really strong statement. Potentially fraudulent. Why is sustainability information maybe at a higher risk of this kind of manipulation compared to, say, traditional financial data?
Well, think about it. The systems and processes for actually generating sustainability information are often still developing, they're less mature, they're changing frequently. This inherently means there's a higher risk of error, just unintentional mistakes. But it also creates more opportunity for deliberate misstatement. Now, couple those risks with the difficulties we just talked about obtaining robust evidence, especially over qualitative stuff or future-oriented information. Well, it creates a real danger, frankly, of the assurance provider issuing an inappropriate assurance opinion, giving a clean bill of health when it's not warranted. And if that happens, if an assurance provider signs off positively on sustainability info that turns out to be wrong or exaggerated, that's a massive reputation risk for them. Huge.
So professional skepticism isn't just like a good idea here. It's absolutely non-negotiable. It sounds like the assurance provider needs to be part detective, part auditor.
Precisely. A healthy dose of skepticism is crucial. And importantly, how that skepticism was applied needs to be thoroughly documented throughout the engagement, especially when gathering and evaluating the evidence that backs up the final conclusion. And this naturally leads us straight into some of those key ethical considerations we flagged earlier for the assurance providers themselves, working in this new and complex space.
Okay, let's unpack those. What are the main ethical tightropes they need to walk? It's obviously a lucrative new area, so there must be temptations.
Well, fundamentally, assurance providers must adhere to established ethical codes of practice, like the ISBA code, for example, just as they do in any other professional engagement. This covers the core principles: integrity, objectivity, professional competence, and due care, confidentiality, and professional behavior. Nothing new there. But a major concern specifically in sustainability assurance right now is professional competence. Many of these new reporting standards are unfamiliar, even complex. Even seasoned professional accountants might not initially have the specific knowledge needed for, say, carbon accounting or biodiversity metrics. Developing that deeper understanding takes time and effort.
Right, so there's a steep learning curve.
Yeah.
But at the same time, you mentioned it's a big commercial opportunity. That sounds like a potential conflict right there. Firms want to jump in and grab this new business.
It absolutely can be a conflict. There's what ethical codes call a self-interest threat. The risk that firms might be tempted to take on these engagements primarily for commercial reasons. It's a potentially profitable new service line, even if they aren't fully competent yet to perform them to the required quality standard. Then there's also the self-review threat. If the same firm audits the organization's financial statements and provides assurance on its sustainability information, there is a risk they might inadvertently end up reviewing or relying on their own work, especially if the data overlaps.
How do they manage that self-review threat?
The typical safeguard, and often a requirement, is to use entirely separate teams with different personnel for the financial audit and the sustainability assurance engagement. Clear separation is key.
So when you boil it all down, it really comes back to balancing those commercial goals with the fundamental principles of integrity and professional responsibility. Doing the right thing, basically.
Exactly that. Commercial objectives absolutely must not be prioritized over the principles of integrity, objectivity, and professional behavior. Their professional reputation, and indeed the public's trust in assurance itself, ultimately depends on upholding those standards, especially in a new and sensitive area like this.
So, okay, we've covered a lot of ground. What does this all really mean for us, for you listening? We've talked about this clear, increasing, almost undeniable need for reliable sustainability information. Investors want it, regulators are demanding it. We've seen how a new comprehensive standard like ISSA 5000 ED is stepping in, designed specifically to provide that reliability, that trust. And we've also explored why it's so important to navigate the inherent complexities and the very real ethical pitfalls involved. It really feels like a massive shift in how companies are going to be assessed and held accountable.
It really is a significant shift. And maybe here's a thought to leave you with. Think about financial statements. Independent assurance on those is considered absolutely essential, right? To build trust, to inform your investment decisions. So how might the widespread adoption of truly rigorous sustainability assurance done well, ethically, competently, how might that fundamentally change how you evaluate organizations, how you assess their true impact on the world beyond just the financials?
Yeah, what might that mean for your future investment choices? Or even the products you buy as a consumer, or perhaps your own career path? It's definitely something worth mulling over as this landscape continues to evolve so quickly.
Yeah.